Welcome to the show. Let's talk to Eddie Tofpik. He's the Head of Technical Analysis and Senior Market Analyst at ADMISI. Eddie, Happy New Year and congratulations on your new job title.
Thank you very much. Happy New Year to you as well.
Right, let's kick off with three pairs. Let's kick off with Japanese yen. Where's this going?
The more lines you have on a chart, more confusing it is.
Yep.
And this is a very simple reason. It's because there's indecision.
Right.
You've got the lines pointing upwards.
Yep.
You've got potential head and shoulders, which is
bearish,
potentially failing as well. You have an even smaller one. If you look over that December action, some could call out head and shoulders as well within one shoulder, but it's indecision. It's not really going up and it's not really going down. You've got some support, which is the medium moving average, which is at 112.12, that sort of purpley line out there. And then you've got the long gold line underneath the market at 111.67. That's holding the market up. You've got resistance at 113.32, which is that short-term downtrend. And it's caught in between the two. We're getting lower highs, and to be honest, we're getting higher lows as well. So it's an indication of maybe a triangle type pattern. Indecision, not sure. I'm not convinced it's going up or down at the moment. The short-term trend would have been to push it back up again, back into the shift pitchforks, up over the 112.78, 50 cent fib there. But at the moment, it's just indecision on that one. It's bouncing off some support at the moment, but the resistance, the support is 112 down to 111.5. And the resistance is 113 up through to 113.50, something like that. It's indecision. It's not really going in either direction.
I'm going to avoid that currency pair. Let's move on to Aussie. Is this clearer?
Oh, it's a lovely one. You look at these things and you think, isn't it a lovely chart? And it is a lovely chart. It's the second close last night over this key 50% Fibonacci level at 78.12. We are now moving up to test the center tine of the pitchfork. That's at 78.70. The line that's above it, it's sloping slightly upwards. It's nicely moving up. There's nothing wrong. It's above all the moving averages. All of them are either flatlining or heading higher.
Yep.
So we're seeing actually an activity where the market is starting to move in the direction it's supposed to do, which is great. It's above that. As long as it stays above 78.12 for, say, the next few days, then I think it's not unreasonable to see attack up over to the 79 level and maybe even higher. But we're starting to run into resistance. If you look back in October, we had that high up at 79 even, and it came back off. But then it was heading down. This time, it's now heading up. So yeah, expect some resistance there. But it's a nice bit of momentum pushing on upwards.
Okay, so we like that chart. Let's go on to the rand.
Again, a great chart. I mean, this is contrary to what everybody said about the political speculation in the country. The charts don't lie. We are now heading down and we're bouncing off some support. There really isn't anything. I mean, to be honest, I have free water all the way down to about 1172 or something, 1168. That line that draws across at 1204.84, that's just a low. It's nothing special. It's not a monthly low, or it's just a low. We've got resistance at 1230, 44, 1253, 63, and 1272.90. Those are the three lows in March, in June, and in September. So you have resistance. All the moving averages are pointing down. They're all pointing lower. They're lagging indicators, we all know. But it's looking as if it might still continue for a stronger rand at the moment, going through the early part of this new year. It's a bounce up at the moment. But the resistance, 1251.20 is really where you just want to make sure it doesn't really go too far beyond that or close twice over in the short term.
Understood. So a seller for choice. Excellent. Eddie, thank you very much indeed.
Thank you very much.